Welcome to another episode of the Reboot Chronicles, a no-holds-barred forum with global leaders, authors, entrepreneurs, and CEOs about how organizations stay focused on growth and innovation in unprecedented times. I'm your host, Dean Tobias, coming to you live from Reviv's North American headquarters in Chicago, and we would like to thank you for joining us from around the globe today. I'd like to welcome Michael Rubenstein, who many credit with radically changing the advertising industry by making it operate more like a commodities market. He's a serial entrepreneur and was one of the DoubleClick founders, which created the infrastructure to automate exchanges for buyers and sellers of ads. As many of you know, I think it was one of Google's better acquisitions, quite frankly. And he went on to be the co-founder of Nexus. That's an exchange for all ad exchanges, and that was acquired by AT&T, our friends over there, for over $1 billion. And now as a co-founder of a really cool platform called OpenStore. It's a company that makes it easy for small e-commerce companies to gain liquidity. So Michael seems to be bringing the algorithms to M&A, which we're going to get into here. Michael, it's good to see you. Most execs really don't understand ad exchanges and next generation of media buying, social commerce, marketplaces, all that stuff that we rattle off with acronyms so eloquently. So one of the questions I had is, why do we think that executives these days should care about this, and how is it impacting their businesses and, quite frankly, their industry sectors? And you mentioned things like programmatic pipes and all these buzzwords, and people just kind of glaze over at some point and go, yeah, that's the CMO's job. I don't deal with that. And what do you think?
Well, first of all, it's great to be here, and thanks so much for having me. I think that what programmatic advertising was and is a response to the adoption of new technologies that allow media brands and allow advertisers to leverage their data assets and to use technology to present much more targeted advertising to consumers, which is driving better response rates. And so if you look at the way media was bought and sold on the internet, on the open internet, prior to the advent of programmatic 15 years or so ago, it really looked a lot like the way television or magazine advertising or anything like that was bought and sold. So the idea of actually porting that model online and using algorithms in real time to tailor media buying decisions was revolutionary at the time. And what started in the early 2000s as kind of an experiment using publisher remnant inventory has since turned into a movement that has kind of eaten the entire advertising and media buying world. It's certain today that the majority of advertising, even in media like traditional media, are being bought and sold using programmatic techniques.
Yeah, it's funny. I remember they started it all out on remnant advertising. It was like, yeah, we'll let you play with that. That's fine. And now it's mainstream. However, it's like years later. I mean, I was CEO of TNS Media. We sold the WPP. It monitored everything digital and non-digital media assets. But it just seems like decades later, the big brands are still blowing tons of money on TV advertising. Probably the least measurable component out there, even though I know you tried to help AT&T do a better job at that. So the old adage of, hey, we're still, I know 50% of my advertising is working, I just don't know which 50%. It seems like that's still out there, though. So why hasn't it gotten to the point where everything is completely measurable?
It's really hard to change existing behaviors in industries. And so anytime a new ad medium pops up, I feel like it's programmatic by default. And it's much easier to create a new way of buying and selling ads than it is to completely retrofit or adapt an old model. Having said that, I think there are a lot of people who are attacking television, and obviously with the increased adoption of connected television and over-the-top streaming and ad-supported video platforms, I think you are starting to see this getting to the tipping point. In fact, I would argue that probably the pandemic, really accelerated a lot of consumer behaviors that ultimately will change the way that consumption and ad buying and selling happens in a video environment. So Yeah, I think it's definitely in transition.
So this is the beginning of the end, potentially.
I think so.
Just don't tell CBS that.
Right.
No, they all have digital platforms now. I get it. But well, let's talk about something that I think is
I mean, it was
fascinating.
interesting to me reading about the growth of Fuba, the growth of Fox's platform, for example, the Avon platform, and just to see actually like these businesses are becoming very meaningful very quickly.
Yeah, it's a good point. And it's interesting to see what you've done now, taking all of your learnings from, the interactive exchanges and ad platforms, and now bringing this to your new venture, OpenStore. It seems like you're focused on rolling up small merchants who are pretty much in the Shopify ecosystem or the Shopify platform. So why are you doing this now? What led you to this?
Yeah, if you look over the last decade or so, there's been an explosion of e-commerce across the world, but in particular in the long tail of e-commerce, and platforms like Shopify have facilitated that.
Yeah.
They've taken, I think, what previously was Main Street retail entrepreneurship and made it really easy for online audiences. And so you have this massive explosion of millions and millions of these long tail e-commerce businesses, and there's a business problem there. And the problem is that the proprietors, the entrepreneurs, they don't really have access to very ready access to financing or liquidity. And so the problem we're solving is, for the first time, introducing liquidity into that market. We will at OpenStore acquire these long tail e-commerce businesses, and we'll do it almost instantly. And in a lot of respects, it's borrowing techniques from programmatic advertising, where you're using data science in order to make complex decisions in short periods of time, in order to be able to do something totally new that hasn't been possible before. In the initial case, when we were talking about advertising, we were talking about buying an ad impression. In the case of OpenStore, we're talking about actually buying a company. And so there's a real win-win at work there. For these entrepreneurs, they're thrilled because we're giving them liquidity. We're buying their businesses, in some cases for millions of dollars, and doing it in a very streamlined, very easy way. And for OpenStore, obviously, we're aggregating e-commerce scale at a very rapid pace. And it's an exciting business. And I don't think anyone has ever done M&A. You were talking about, innovation in the M&A world. I don't think anyone's ever done M&A the way we are doing M&A before.
Yeah, innovation in the M&A world is an oxymoron, of course. But, having done just dozens and dozens of M&A deals and taking companies public and just, my whole life, it seems like if any category needed a reboot, it's that one. But yours is very focused. It's specific niche. It's small merchants. It's they don't know what liquidity means. They're like, when they hear that term, they're probably thinking, are you a plumbing company? What would you actually do? But I also mentioned in the open that you're kind of going hardcore algorithmic here, almost like Zillow was when they're buying houses and they stopped because it kind of got overheated there. So just tell us real quick how it works, because it seems like, to me, it almost seems too automated. It seems it's too easy, right? And as we know, buying companies is a very personal, situational process. So how's that going?
It's interesting that you mentioned Zillow, because I know they have not fared well in their home buying experiment.
Right.
But there's another company out there that has been extremely successful at it, and that's OpenDoor. And OpenDoor was co-founded by my co-founder at OpenStore, Keith Raboy. And essentially, they have proven that you can take a market with a long tail of assets that people might commonly think is too complex to automate, and you can actually bring data science and automation to the problem and streamline it. And if you go to OpenDoor today, you can sell your house very, very easily online. And we're solving a similar problem for selling actual businesses, a different asset, but it's the same problem. One of our biggest investments is our data science team. And essentially, we are When merchants come to our website, when they come to open.store, they give us access to their Shopify data, they give us access to their bank data and so forth. And we're using data science to be able to determine what we think that business is worth and then present that offer to the merchant in a very short period of time, within a day, and probably in the future within an hour. And it really streamlines the process. People can find out very easily what their business is worth. And if they're ready to transact, they can sell their business to us in a matter of days. So no drawn out corp dev process, no multi-month diligence or what have you. I mean, you're talking about a very streamlined and easy process for people who are looking for, let's not say liquidity, let's say looking to move on to the next chapter of their careers and be rewarded for the risk they took in entrepreneurship, which is something that they can't get today.
Yeah, I see your side of it. With if you've got the Shopify data and the banking data, you can pretty much audit their performance. So that tends to be good data points. How do you? And I notice you don't keep any founder involved. Like a typical private equity model is, they might roll another 20% back into the business, and it's probably cleaner for your balance sheets if you don't do that in your cap tables and have 50 merchants on the platform. But so I can see it from your side. Does the simplicity of it all scare people off a little bit? Like, who are these guys? Since you're early, I mean, eventually it'll be a known commodity. But have you scared off some in that the process actually being too fast? Like, no dinners, no closing dinners, stuff like that.
Yeah, it's definitely a learning curve for people. Similar to what you were saying before when we introduced programmatic advertising into the world. I mean, you always get your early adopters, and then you get people who join in later. But I think fundamentally, once people get it, what we're doing, it clicks pretty quickly, and they can see the benefits over what exists today in terms of options for selling their businesses. There really aren't. There are old school business brokers, which honestly are not that different than they probably were 10, 20, 30 years ago.
No.
There are, like really not a lot of options. And this, by comparison, is extremely efficient, simple, and clean. And so as soon as people get it and understand what we're doing, they tend to get pretty excited about it.
What type of volume have you had in the system, and what have you closed so far?
Sure. So we started buying companies kind of in the late summer. The company only launched at the beginning of this year, so we're still relatively new. And I would say we really started to hit our stride in Q4. We have acquired somewhere between 10 and 20 companies at this point, but the rate is certainly growing. We have a goal of leaving this year on a run rate of acquiring about a business a day. And we certainly over time want to increase the speed around that as well. For us, it's really exciting because I mentioned before, there are millions of long-tail e-commerce businesses out in the market. Mm-hmm. And we don't need to buy millions in order to make our business work. We need to buy a much smaller number. And I think that it feels great to reward entrepreneurs. A lot of these people have been working very, very hard. It's a very stressful experience, as you know, building and bootstrapping, in most cases, your own company. Right. And it's really awesome to work with entrepreneurs and reward them for that.
So have you launched the platform already? Are there companies that are already up where I can go and buy stuff?
We haven't launched like a unified consumer app or storefront. We basically operate individual storefronts, and those are the storefronts that we acquire. But we have acquired, as I mentioned, north of 10 businesses, and we've started to build out our internal platform for running those businesses. You mentioned before about the founders and them not joining. We tend to find that the founders, once they're ready to leave, or once they're ready to sell, as long as they feel that the business is in good hands and will be treated well and invested in, they're happy to leave and get their payouts sooner rather than later. And for us, given that one of the ways that we intend to succeed here is by creating a proprietary platform and proprietary capabilities that will help us run these businesses more efficiently and effectively. It's in our interest also to transform these businesses as quickly as possible and get them on our platform so that we can, keep going out and buying additional ones. Ultimately, we're trying to build a scalable machine here that can constantly be acquiring and investing in and improving these businesses that we identify as being suitable targets.
So what's an example of a couple you bought so far?
Sure. So one example we've talked recently publicly about is Farm Foods. That was one of the first businesses that we bought. It's an online DTC seller of meat and poultry and fish, which is a category that's grown significantly, especially during the pandemic. People ordering fresh frozen food over the internet as opposed to going to the grocery store or to the market. And as you know, people want locally sourced organic cuts of meat. And so there's an amazing founder who was a former Tesla employee. She's wonderful, and she started the company and got it off the ground and got it to a certain point and just felt like it would be better to move on to the next thing if she could get an appropriate offer for the business. And she came to OpenStore, we acquired the company, and now we've moved it over to our platform, and we intend to invest in it and continue to grow that business and become a meaningful player in the online frozen meat category.
So that was my next question was, what's your lens? What are you focused on in terms of categorical acquisitions?
So right now we are focused on Shopify businesses. So we're not at the moment buying e-commerce businesses that are built on other platforms. We may over time, but just for simplicity, Shopify has had stunning success over the last decade, as you know, and there's a high concentration of small merchants there. And so we've just started there.
And what if I'm really a good merchant on the Amazon platform?
So we're not buying Amazon merchants. There are a number of other companies out there that do buy Amazon merchants. There's been a lot written about the FBA aggregators. Right. That's not our business. So for us, being in the DTC business is a core part of our aspiration. Mm-hmm. Our intention is to build one of the biggest DTC e-commerce businesses in the world. And on Amazon, Amazon captures a lot of the value and owns the customer relationship. I think one of the things that's critical to us about our businesses is we really want to own the end-to-end everything, and everything from sourcing to fulfillment through to the customer relationship. And we tend to find that in the DTC side of things, not in Amazon.
Yeah. So back to the categories. So sounds like food is one.
Yeah, we're fairly category agnostic at this stage. So essentially, you asked about criteria. If an e-commerce merchant is on the Shopify platform, most of the merchants that we're acquiring at this stage probably have less than 10 million in annual revenue. Mm-hmm. Great customer relationships, customers who love them. And we're fairly product category agnostic at this point, as I mentioned. But over time, I assume we'll learn more about which categories that we prefer to invest in and so forth. But that's pretty much it. If you come to Open.store, we'll give you a price.
Yeah, sorry about the audio. It just seems, as a scaler of companies myself, so I get how you can scale the front end. You get marketplaces, e-commerce platforms, you get all that down. But to actually run the back end of a meat packing, freezing company and the back end of a fashion clothing company and a beauty makeup company, to me, that is pretty far flung. So how do you rationalize all that?
Yeah, that's a really big and important part of the business. And we are going to have to build meaningful infrastructure in order to be able to support that. And so that is one of the reasons that we've gone out and raised a substantial amount of money. especially for a company at our stage. We've done at this point multiple rounds of financing with top tier Silicon Valley investors. We know that we're going to need to make a significant investment in order to be able to operate that way. Having said that, we also believe that once we've made that investment, that will give us a level of scale and give us a level of control over our business that will be extremely uncommon in the e-commerce space. And so we're very optimistic and excited about the levers that we will have over time for really creating value.
At what point do you become less of an acquirer and more of an operator of all these companies that you are basically rolling up? Some independent, maybe some combined.
Well, it's a great question. And I think obviously the more companies we acquire, the more the business will start to look like a big e-commerce operating entity. Right. And so, yeah, but I think what we've decided is that our mechanism for one of our primary mechanisms for growth will be this very unique acquisition model that occurs through OpenStore. And so, yes, for sure. I think this year, because we were just starting the business, the primary focus has been building that front end where merchants can come and sell us their business in really streamlined way. But increasingly over time, the e-commerce operations of the business will become a bigger and bigger focus.
I bet. Just focus in a little bit about a space that we're pretty involved in here, which is health, beauty, and wellness. So there are no shortage of indie companies, as they like to call them, almost coming out of the woodwork. Everything from health, beauty, wellness, and you already mentioned food, but some of them are some very frothy valuations that were probably not as frothy a few years ago. So at what point do they fit into your model? High valuations versus seems like you're looking for really good deals on small DTC companies that are, ready to sell, but it doesn't feel like from an algorithm point of view, you want to negotiate really high valuation types of stuff. You're looking for a sweet spot, I would guess. Is that a good assumption?
Well, if what you're implying is that we want to buy cheap businesses, I don't think that's the case. We want to buy good businesses, and
I guess some of them are overvalued. I just didn't want to say that, but some of them, the valuations are so high on some of these companies right now. Yeah.
Yeah, I think
does it fit your model? I guess is a better way to say it.
I think in M&A, if the market says that a business is worth something, then as an acquirer, you have to decide if you want to pay that. I think really part of the secret sauce for OpenStore is, as I mentioned, we're developing these proprietary algorithms that are helping us to value the businesses according to what we think they're worth. And if that doesn't align with the expectations of the beauty brand or the entrepreneur, then that's okay. Market valuations will fluctuate, as you know, and they can come back a year from now and try again. So I think we are trying to value good businesses at a fair rate and to present that to the entrepreneurs and hope that there are enough cases where they'll agree. And so far, it seems like that's bearing out.
Yeah, seem to have a good track record so far. It's early, but so what do you think of that category? Beauty, so skincare, cosmetics, things like that.
Yeah, we're big fans of beauty. We would certainly buy beauty companies. And it's most certainly one of the biggest categories that you see on platforms like Shopify. It's also obviously a huge category on social media and social commerce, which is an emerging channel for DTC e-commerce. So yeah, we're very bullish on beauty category.
As you look at your, going forward when you're building out the platform, social commerce, embedding your stuff in other sites, are you more of a destination, or how do you see yourself differentiating as a next gen commerce provider versus, right now most of them are like, hey, just come to my site. It's like that's not the future. I think. What are you planning there?
Well, at the moment, all of our marketing and advertising is, as you would expect, on third-party platforms like Google and Facebook and Pinterest and TikTok and so forth. But I agree with you. I think that increasingly commerce will live on the attention platforms. I think that's one of the reasons that coming from my background in media and advertising, that I was drawn to the e-commerce space, is because I'm seeing this really interesting convergence between the two. Obviously, Amazon being the best example of that, with its incredibly strong e-commerce and advertising engine. But yeah, so I think it will. I think our business will evolve as commerce on the internet evolves, and I do believe that we're going to see a very strong convergence between media and commerce.
Yeah, you seem like you've got the funding, and you guys are patient enough. I mean, you yourself, the last company you sold to AT&T, so you survived the Death Star phase, as I call it. I can say that I was a CEO of one of their subsidiaries once, and actually divested a company from them. But actually, that's a good question. What did you learn from your App Nexus beginning, middle, and end journey, especially after being acquired? That's kind of helped you reboot OpenStore maybe differently than a competitor to OpenStore might be competing against you.
Yeah, it's a great question. I mean, AppNexus was an amazing, very fulfilling career experience for me. And, taking a company from startup through to growth stage, through to sale to AT&T, through to integration, was really like a full life cycle experience for me. So I learned so much at every stage along the way. I think that one of the things I've learned that I apply to OpenStore is the fact that, I think ultimately there are things you can do to accelerate the growth of the business from startup through to growth stage business. And we're trying to employ that as much as possible today to bring on great talent, financial partners, focus our efforts on the areas that are going to create the most value as quickly as possible. So, I mean, I think I draw very, very heavily on both my AppNexus and DoubleClick experiences in building this business. I also, have also really enjoyed working in large enterprises. I mean, obviously didn't stay very long at Google or AT&T after we sold those businesses, but I learned a tremendous amount and was fortunate in both cases to be able to work with members of the senior executive team who either taught me things or I just learned from by observing. And I think you can learn something in every environment. And I'm pleased to say, I mean, I did learn a lot, for example, in my time at AT&T as well.
Yeah, it sounds like it. That connective tissue between small company and large company, there's only a few of us that can play in those environments and have, thankfully or unthankfully had to do both. We've got some stories. Michael, I really want to thank you for joining us, but maybe in our last couple minutes here, any advice that you would give aspiring entrepreneurs, just given what you've been through, at an early age, many of them coming right out of college, many of our students at Kellogg Northwestern are doing startups before they've even graduated, but any quick tips on, what the roaring 20s, how they should approach it?
It's a great question. I think that there's probably so much advice, people can give. If I look back on my career, I think one thing that went really well was, when I first got into the internet in the late 90s, I went to work for a pre-revenue startup in Toronto, where I'm originally from. And we essentially pioneered the area of permission-based email marketing. And we ended up selling that company to DoubleClick over time. And it's amazing to me how often I look back and I draw on those early experiences where, I wasn't concerned in those days about creating my own company. I was really just focused on learning. And I think there's so many cool startups in so many areas where graduates can go these days. I mean, there's, as you mentioned, there's incredible stuff happening in e-commerce and crypto and DDC and all kinds of things. I think just jumping into something that you find interesting and immersing yourself in learning at this stage is an incredible investment and something that will pay off huge in 10 years time, 20 years time, along many different dimensions. And so I think that just finding something interesting and fully immersing yourself in it is the best advice I could give.
Any special categories that you like?
I mean, obviously, e-commerce. I believe that if we look back now, pre-pandemic, and say, okay, 10 to 15% of all retail transactions were happening online, and that somehow seemed normal to us, is just bizarre now. I mean, we live now, I think, in a world that's moving to e-commerce first. It's going to take some time to get there, but I just think the experience of buying online is so much more convenient and so much better. It's hard for me to see how retail transactions don't get close to 50% of the market by 2030. It's not a scientific prediction, but you're talking at that point about a multi-trillion-dollar marketplace that's meaningfully bigger than the world we were living in before the pandemic. And it almost makes the idea laughable that e-commerce was a mature thing years ago. I think we're still in the early stages. So I'm a big fan of e-commerce and the intersection of e-commerce and media. And I'm obviously betting there personally, and I think there's a lot of exciting stuff to come there.
Yeah, good advice. Thanks. You've been listening to Michael Rubenstein, who has got a really cool company you should check out called OpenStore. And this is Dean Tobias with the Reboot Chronicles. I want to thank you for joining us, and we'll see you soon.